Look at this trade. It is just ranging and is not very impressive, right? Now look how this other trade is 100 times better. Well, you'd be surprised to know that both of these trades are actually on the same time frame, same pair, and same indicator. The only difference is that one of these indicators has been reprogrammed and immensely improved to now provide far better entries and exits. Today we are covering a version of the MACD that you've never heard of and has been developed to provide longer-term variations during trending markets and cyclic variations during ranging markets while still filtering out noisy signals. Here's a quick side-by-side comparison to show you how much better this version is. To get this upgraded version, let's go to Trading View, click the Indicators tab and search Adaptive MACD. It's this one by LuxAlgo. In simple terms, this version of the MACD is made to be more adaptive to changing market conditions, whereas the regular MACD would struggle. If we quickly go to the settings, we can see that we have far less options compared to the regular MACD, as everything is already baked into the indicator and we don't need to worry too much about these options as the defaults are fine for our testing. When compared to the regular MACD, we can see once again that the adaptive MACD has all the same features as the traditional MACD. We have a signal line, histogram and MACD line. However, the adaptive MACD is far quicker at identifying trend changes. Here we can see that the market is in a bearish trend. A bearish trend is when a market makes lower lows and lower highs. As long as a market continues to do this, the structure is referred to as a downtrend. In downtrends, we want to wait for price to pull back before taking an entry. This prevents us from selling at the lows and being stopped out on retracements. As the market retraces, we can use indicators such as the MACD to time our entries to get a buy or sell. In this situation, we want a sell. As you can see here, the adaptive MACD is already providing me with a sell opportunity, whereas the regular MACD is still telling me the market is retracing. Later in this video, I will share with you a way to pair this MACD with another indicator to know exactly when to take a trade and to always see the market structure without constantly watching the chart. Right now, I will take an entry based on the adaptive MACD and I will set stops above the recent swing high, which is also the lower high in the downtrend. By setting stops at this level, we are protecting ourselves from the market fluctuating and hitting our stop loss, and if the market does happens to hit our stops at that high, that would be an indication of a market structure shift, meaning the market would be transitioning into an uptrend and we would not need to try to take any other sells at that point. Now that we have an entry and a stop, we can target the low of the downtrend, or we can use the MACD to know when to exit the trade. I would recommend using the MACD to know when to exit the trade, as this will allow you to have a dynamic take profit that can run into deep gains and can sometimes result in high risk to reward trades. So let's execute, and as you can see, the trade ran very nicely. If we look back at that trade and compare the regular MACD, we can see that if I had taken that entry using the regular MACD, I would have gotten a late entry and my risk to reward would be much lower than when using the adaptive MACD. The adaptive MACD can also detect divergences much faster than the regular MACD. A divergence is when the price of an asset trends in another direction than that of another asset or indicator. We have a video here that explains this in further details. Typically, this can be an early indication of a trend change. Here we can see that while the divergence was detected on both indicators, the adaptive MACD was much faster at showing the divergences. Once a divergence is detected, we can keep stops below that low and wait for a possible entry signal and take a trade targeting either the market high or low, or we can hold the position until the indicator gives an exit signal. By this point, it should be very clear how much better this version of the MACD is. But you might be wondering if this necessarily means that the signals are always better, as getting early signals is not always a good thing. No indicator is perfect, so there will be times where the traditional MACD might get a better entry, but overall in the long run the adaptive MACD performs far better. If we just go to a random chart and just compare the raw signals from the adaptive MACD to the traditional MACD, we can see that the adaptive MACD would have net a larger return than the traditional MACD. These trades were taken by simply buying when there is a buy signal and selling when there is a sell signal. Note that this is not how the indicator should be used, and it should always be paired alongside your analysis, and this is just to show how the raw signals are overall better in our opinion. As promised earlier, I will now share with you a way to pair this indicator with another in order to get the best signals automatically and have the market structure plotted. As you can see here on the chart, this additional indicator is showing me exactly where I should be taking buys and sell. These signals are custom and are based on a combination of the MACD and the other indicator, so I don't have to look for them manually. But before we do that, don't forget to like and subscribe to not miss out on future videos. And if you would like more awesome tools such as this, don't forget you can use the link in the video description to try LuxAlgo Premium Suite risk-free for 30 days. Your continued support really helps the channel. Now, as promised, let's go to the Indicators tab and search Price Action Concepts, this one by LuxAlgo. This indicator automatically plots market structure so we can know exactly where we are in the market without doing it manually. It has many options relating to price action that we can toggle on and off, such as the liquidity grabs, but for this strategy we want to scroll all the way down to the Custom Alert Creator. The Custom Alert Creator will allow us to create alerts based on a specified set of criteria. For this alert, we want to get an alert when the market structure has shifted bullish and then there is a bullish break of structure and the adaptive MACD histogram is greater than 0, meaning the MACD is bullish. So I can set market structure to internal bullish, and then we can go down to external step and we can set this to the adaptive MACD histogram and set this to be greater than 0. Once we have done this, we can now see that the indicator now shows us exactly where these signals are. And we can just execute trades at these levels. You can now also create an alert based on these settings to be automatically updated once these criteria are met. For the sell positions, we can do the opposite. So we want to get an alert when the bearish BOS occurs and the histogram is less than 0, and this will automatically plot our sell signals. This is a very powerful strategy. We are using the adaptive MACD to ensure that the momentum in the market is good before using a market structure shift as our entry criteria. So to show once more what is happening, let's say that market structure was bearish, but price broke structure and it is now bullish. We don't want to enter too early as there might still be a pullback, so we wait for a bullish BOS to be formed after the change of character, and we also want to ensure that the market momentum is shifting bullish before executing, giving us a higher probability of success. The Price Action Concepts indicator automates this process for you, so you can just focus on the execution. It is worth mentioning that the Price Action Concepts is a part of the LuxAlgo Premium package, but you can also do this using the free Smart Money Concepts indicator by LuxAlgo. This version is completely free, but you will need to manually find the entries and exits. And there you have it. I hope you enjoyed this video on the adaptive MACD and how you can use it alongside market structure to get highly probable trades. As always, don't forget that no indicator is perfect and your trades should always be backed by sound analysis to get the most out of these indicators. If you would like to try the LuxAlgo Premium package for 30 days and test this strategy, you can use the link in the video description where you will get the signals and overlays, oscillator matrix, and the price action concepts that was used in this strategy. Don't forget to like and subscribe to not miss out on future videos. Stay strategic, keep learning, and we will see you next time.